Okay, guys, we're recording this little class here that we're going to do. We're going to talk about Bollinger Bands. And what I'll do is we're going to somehow configure this so it's going to be on two different screens. I'm going to perform some magic this morning. But the Bollinger Bands are based on standard deviations around a mean. So, for instance, let's um, let's put some indicators here. Okay, this I'm looking at this with NinjaTrader. So in NinjaTrader, you can take your Bollinger Band and throw it right in there. But let's not worry about ain't much at all yet. So right in here would be the mean, the average. Okay. So really, if we take that away, we can add in uh, we can add in indicators. We could put in a moving average, right? And I apologize, a little sound behind me. There's some people talking. I have my cleaning ladies here today, and I forgot that they were coming. So if they're behind me, don't worry about it, okay? Okay, so let me find the moving average, the one I want to use. All right. All right, here it is, simple moving average. Okay, we put it here, and if we leave this just like this, your simple moving average. So if we go 20, you can see the moving average is right here in the middle. All right, your simple moving average is right here in the middle. What John Bollinger did in the 1980s was he put these deviations around the mean, around the moving average, based on the volatility of the market. Okay, and it contracts and expands around the volatility. And traders, what they do in a trading range is they like to sell the high, buy the low. And the basic indicator for Bollinger Band is defaulted at 14. All right, it's defaulted at 14. And let's just take a look at this for a second, and let me change the colors. So we're not gonna, okay, we're gonna change the colors here. All right, so if we change the colors right there, you can see how just a standard Bollinger Band, that a push above, say, resistance up here pushes outside the Bollinger Band. So it expands and contracts. Hold on one second, guys. Okay, I'm sorry, guys. There was some noise behind me, and didn't mean to have that. All right, we're recording this. So you're taking the moving average, which is your mean, and they throw two standard deviations around that. What we did at LBR Group for many years was we took 20 period standard deviation, was 20 period Bollinger Band, and in a trading range, when the market opened up in the morning, we did it around a 5-minute chart. And when the markets opened and closed, for instance, at 9:30 in the morning, right, 9:30 in the morning, when they pushed to the lower Bollinger Band after 9:30, right, When they push to the lower Bollinger Band, we would buy them with an exit here. When they push to the upper Bollinger Band, so when we push to the upper Bollinger Band, we would typically look for two opportunities: a push to the upper Bollinger Band and move back to the moving average, a push to the lower Bollinger Band and a push to the moving average. In trading, you would get a lot of people like to watch the tests of these Bollinger Bands for reversals. Okay, it's a real neat tool to use. All right, so you don't, it keeps you out of touching the market in the middle, but you're looking at resistance levels above the market. Oops. So if you're looking at swing highs and swing lows, so you got swing high here, swing high, swing high, swing high. You can see we're coming into a resistance zone. It's above the Bollinger Band, and let me change the Bollinger Band color a little bit better. So let me just change this Bollinger Band a little bit better for us, okay? All right, it's raining outside. It's raining really hard, guys. You could hear it, the rain hitting the roof. It's so hard. All right, you can use it on MetaTrader or Ninja. It's essentially the same thing. And what we're gonna do, let's change the bars so we see them a little bit better. Actually, you know what? Let's just leave the candles. Let's do like we've been doing. Maybe just change the color of the up bars. We'll just change the color of the up bars, make it a little bit more uh, appealing. Let's just see. That's okay. All right, that's good enough. So that way we can see things a little bit clearer. And let me just check the other bars. It's red. Okay. So the way the Bollinger Bands work, essentially, is they expand and contract on volatility. So where there's no volatility, they contract. Where the market starts to increase volatility range, they expand. And what's happening is they naturally expand and contract based on the volatility. So it shows you that the market is in a, a support or resistance, or it's expanded itself enough that it needs to contract. A lot of traders like to look at Bollinger Bands. All right, they look at Bollinger Bands and they say, okay, as soon as it's back below this upper Bollinger Band, we're going to short. So technically this would be a short and your stop would be up here. And you would look for the Bollinger Band to come back at least to the middle of this whole range. All right. A lot of traders like to do that. That's one of the little games that's played. Now, if you're taking this model right here, let's just say using, you guys can see the screen? No, hold on a second. There you go. Yeah, the standard deviations I like to use are a 20. So you have two standard deviations, but you can also add additional Bollinger Bands around it. So you're not just regulated or confined to that. So you could say, okay, we got a 20, but now we're going to do three standard deviations around that, okay? So let's take a look and see what we see here. And then you got another one, you can do 20 with four standard deviations. So let's give them all their own color. Or maybe I'll give them a different color. All right, we'll give them a different color. We'll use fuchsia. Okay. Okay, so now we're starting to build a little model, as you see, where you're now using these multiple standard deviations, these multiple Bollinger Bands around that zone. So now you're saying to yourself, well, normally two, it comes to two, 2.5, you can use 3 and 4 standard deviations on the Bollinger Band. So when markets move up to a zone, you find a resistance, you now have this area you can work with. All right, 20 is a good number to use. So I like to overlay them because when you're looking at the markets, you want to know what the normal standard deviation move is and what's not normal. So if we look in the past, we see that, yeah, it moved 2 and 3 times the standard deviation around the mean, but it's rare that it goes, was it 4 times up here, right? It's rare that it goes 4 times. So that being said, if it's rare that it goes 4 times and you're getting pushes outside the range, your risk can be way outside of that, the normal deviation that you're getting, you see? So if the market went up here and exhausted itself in a range, you now can be comfortable that you can put your risk much higher. Okay, you'd be putting your risk up here and you're working with this standard deviation and this standard deviation on the way up. So yeah, you're working an 87 to 89 zone and your stop is up at 90. In a trading range, that should be fine because you see how the market acts. Now, here's a trick. In the first hour of the day, when you're working with Bollinger Bands, in the first hour of the day, you're good. When you start going after the first hour, so let's take a look at the first hour of the day of trading. All right, even like 9 o'clock going forward. All right, so right into here, your first hour of the day, you tend to get your best bang for your buck. All right, your second hour of the day is not so bad either. All right, oops, get rid of that. Your second hour of the day isn't so bad, but after the lunchtime hour in the afternoon, things can change. You know, it's not really the best. The best time to use them is within this first hour of the day. This is on a scalping model, you know, day trading. The second hour of the day, so you have to understand. So you have to understand a lot of breakout systems come after the first hour. So I like to look at 2 to 3 standard deviations around the mean being the 20 period moving average. Now we can modify this a little bit. I'm looking for, no, you're not looking for anything. You're looking for whatever the moving average is saying that it can come down to. So this is always going to be different. That's the beauty of the Bollinger Bands, is this is always going to be different. Like right here this morning, that would be different than this, you see? It's always going to be different. Your swing's always going to be different. Okay, so if we were to modify them a little bit and we start looking at maybe a little longer term smoothing horizon where we do these on a 50, okay? We do them on a 50. Let's take a look and see how the 50 looks. All right, let's see here, 50. So if we look at it, becomes a bit more smoother, say on a 50 period. So a lot of traders look at the 20, but you can look at the 50, you could look at much higher levels and smooth them out even further. Now you've taken the Bollinger Band and you've taken it out of its true form, and now you're creating uh, these standard deviation lines around the mean. All right, where you can create and look and say, okay, when the market's faster, a smaller time frame, you can use a wider time frame deviation, where the smaller charts not so much. So I mean the bigger charts not so much. So let's go to 100 and let's just see how this looks on 100. We'll smooth it out. Okay. So if we look at this Bollinger Band at 100, at the mean being 100, the moving average being, it's going to look back at 100 bars of data. Okay, it's going to look back at 100 bars of data. You can see that. All right, so you can, on these faster time frames, you can look back and look at the prior zone, and then let's start seeing what has happened every time the market has hit. Okay, resistance, resistance, I mean support, support, didn't make it, support, 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 resistance. Now you're in resistance one more time. So however it works for you and your eye and what pleases your eye, that's really what you want to use. But you can use a 20 period standard deviation. I mean, the mean at 20 period with 2, 3, and 4 standard deviations. You can use 50, you can use 100. It's whatever is pleasing to your eye, and you see what fits best in terms of the prior swings that you could take advantage of. All right, you can mix and match them. You can put, for instance, you can put Bollinger Band a 20, a 220, and then change these. Uh, I don't know, change it to, what other color do we have here? Blue. All right, so you can start to see how you can integrate the two different time frames with it. So we'll throw another one, we'll throw a third one in there. So you can create your own little trading game, all around using the Bollinger Bands. Blue. I look at so much stuff that I don't even look at this, but there is nothing wrong with using Bollinger Bands for your trading and really taking advantage of these little swings. Let me get rid of the arrows. Okay, so if you look here, you got Bollinger Bands all clustering up together up in the zone up here. So you can combine two different types of time frames together utilizing the Bollinger Bands, both on a 20 and a 50, and you could just see how they both kind of work together up here. You guys see that? You see the thinking? So you now, bless you guys, so now you have a nice little area where all the Bollinger Bands are meeting and they're kind of crisscrossing, kind of doing something like this. All right, you got one type is doing this, another type is doing that. You see that? So when you're trading the markets and it comes up into the zone, you're kind of getting that matrix up here. All right, so you also can throw in maybe one more, that Bollinger Band, which will throw our 20 and throw 4. Okay. All right, so you see how all this starts to tie together. So let me look. Let's see if we can do this on. I'm not sure if we could, but let me see if we can do this on MetaTrader 4 and show you guys on the Forex side how this can work. So let me just throw up MetaTrader 4. Okay, that's our scanner. All right, and let's look up for another chart. Okay, so MetaTrader 4, let's do some of the same type of action, and you can do this on a larger time frame with Forex, well, a smaller time frame. So let's clean up the chart a little bit. I say we keep the black background. That looks nice. You go to View, Navigator. So we want to start bringing in Bollinger Bands. So the first one we bring in, and you can see I already do this on my other stuff. So actually, I think I might. Uh-oh, I did something wrong. Okay, one more time. One more time. All right. I know we were looking at this a few minutes ago. Here we go. All right, let me see if I could show you. I may have it up on Owanda. Okie dokie. Get rid of the grid. Gonna view Navigator one more time. Gonna go to Bollinger Band. We're gonna pull them in. So I had already done some work here, but let's just go back to do the 22, and we'll do the 23, and then we'll do the 24. All right, we'll open this up a little bit. And once I get all this organized, we'll do yellow. Okay. Okay, well, Forex, the 20 is kind of slow, kind of fast on this particular chart. So let's just change it up a little bit. We'll look at the 50 and the 100. Alrighty. Okay, here we go. So if we look at this, this is a 50 and a 100 mean, and these are your Bollinger Bands. So you got the EUR/USD. We could look at it on multiple time frames. Let me just bring this over. Here we go. That's better. Let's take a look at this on a 15-minute chart. So traders like to use this on Forex. They use the 20. I particularly like using 50, 100. And you're always looking at this in terms of where's your resistance, where's your support that you're working with. So, for instance, when you're coming up here, you're looking at where prior resistance was. So let's tighten it up a bit and take a look. All right, let's take a look at where prior resistance was. Okay. I like looking at all these little swing highs and swing lows. All this in here, this is all structure, right? All prior swing highs and swing lows. Right? So all this in here is important to watch. So now you're getting a push up into your Bollinger Bands up here. You're getting a standard deviation move around the mean, away from the mean. Now you're getting back to it, you see. Most likely you're looking, because it failed to come out the upside, you're looking for possibly a test down. So where you would look on the charts, you have this, you have that, right? You have these little spots where you can watch below where the market goes. You don't want to just arbitrarily only use the Bollinger Band. You look at all these little swing highs and lows where the market can test and how it ties into your Bollinger Bands. All right, that's different ways to look at it. You guys follow me so far? You guys are following me? Okay. So when you start looking at, for instance, we're looking at our scanner. Let's start looking at the scanner and saying to ourselves, okay, how do we use it for the scanner? All right, come in. I look at a 50 with a 2. I'll make it a little thicker here. Okay, and let's do a 50 of blue. So let's do 50 with a 3. Okay, all right, 50 with a 4. It's okay. It's okay, LaRue. It's okay. So now you're seeing, using the Bollinger Band with our scanner, how you now can create a cool little trading game. Let's go in here and put a 20 with 4, see where it comes out to be. So put the fuchsia, the magenta. That's a little bit too much. Let's check it with the 3. I just erased something. I don't know what I erased. I think looking at this, it just feels these bands are a little bit too fast. So I'm not really a fan of the 20. I'm really not a super fan of the 20. A lot of times you get that 50 is just perfect. All right, but let's just check 20. All right, so your 20's in here somewhere. Hard to see it. I think the 50 is a fine one to use when you're using the robotic scanner. And every time frame is different. All right, this is for an hourly chart. But you see how you're moving away from the mean. You're getting that standard deviation move away from the mean. And you're using the Bollinger Band, the modified Bollinger Band, to tie into what's your charts are telling you, what the pattern's telling you. Let's take a look at some more. Okay. All right, let's take a look at some more stuff. All right, so if you see here, the standard deviation lines and our zone are pretty much right next to one another. Okay, let's take a look here. You see how the standard deviation lines, all right. Okay, so you see how that starts to play in. So when you're using these, our scanner, which is the robotic scanner, and you're using a pattern or any kind of resistance and use that with the Bollinger Band, they tend to, the standard deviation lines, they work out pretty well. You see how that starts to look? So there's nothing wrong with taking your Bollinger Band, all right? So you have your Bollinger Band, you move in, I mean, your standard deviation line, you move into your zone, and now it comes back outside of your standard deviation line. So it snaps, it pushes into that zone, pushes out. Let's take a look at some other examples. So using it with the scanner is phenomenal. So Malek, I know you're brand new with us with the platinum package. You see the benefit of using it, Bollinger Bands with the harmonic scanner. It's great, right? Real nice how this can be done. So you're taking your harmonic scanner and you're going next level with it, right? How do I turn this off? Aye, aye, aye. Okay. Okay, there we go. See that? So it looks like the 50 period Bollinger standard deviation lines. Um, Dave, did you yeah, hold on a second, guys. Let me just show you something. Dave, if you go back to the back office, okay, on iMarkets Live on the scan, I'm actually going to email it out to everybody. But if you go back in the area where the scanner is, I put a new video up last night. It takes you through the whole email setup process just to confirm to make sure it's fine. I did another video. So the one last night that I uploaded it last night late. Did you see that one? So basically, your email is when you set up your account, all right? Okay. When you set up your account and also in your export properties, right in here. Okay, right in there. Oh, gotta change my password again. Um, Not in there. Right in here. I'm sorry. Tools. Oh yeah, that's it. Right in here. You got to make sure that this is on. Send email. Got to make sure that's on. And then tools, options. In your options area, go to email and then fill out that information right there. Okay, and then you should be getting emails from that point. You got to test it also. You hit the button, the test button, and it should be fine. You should be good to go. But it'll send you ideas as it happens. I mean, the last one was like an hour ago. Okay, cool. So right here, you're looking at the standard deviation bands. You're working with your scanner. So anything that can confirm, um, yeah, they'll start happening. They'll start happening. So anything that you can confirm with the Bollinger Band or use the Bollinger Bands to confirm, that's fine. I also like using what Linda Raschke brought to the market is the 310 indicator, 310 oscillator. Let me show you something else. All right, so we got the navigator. So I know Scott Carney, he uses the RSI for his BAM reversals. He uses the RSI to help time the this indicator right here. You know, he looks at it to confirm divergences. All right, I like to do MACD, draw it over. We do 3, 10, and if I see any of you Facebook champions out there on Facebook that you created the newest, greatest MACD and you're selling it, I'm going to call bullshit on you. Okay? Don't be taking this and then put it out there as yours and selling it. All right? I know people do that. I'm just kidding with you. Oh my God, stuff I see out there just makes you like, ah. Okay. Sorry for the BS word, but little disclaimer. So anyway, I like to look at the 310 oscillator. You could throw that as a confirmation tool. This looks like it's starting to roll back over. All right, but that's another class for another time. All right, so let's take a look at the smaller time frames, like a 15-minute chart with the standard deviations, using them with the scanner. All right, so you're getting your standard deviations are down here as opposed to this one. See this one right here? You're right in the middle. But this also is a pullback right to the middle. It's a pullback in a bullish trend also. Something to keep in mind. All right, so I thought I would share with you a little bit on, how we look at, there it goes, on how I look at the Bollinger Bands, how we modify them a little bit, and I hope this class made a little sense to you. We'll switch back to, what did I just do here? Oops. Okay, we'll keep that on. So what I do is I just recorded this. Let me just all right, everybody, we're just going to end the recording. My name is Christopher Terry. This was a class on Bollinger Bands and standard deviations.